Welcome back to another video. Soil here, and today I want to introduce a multi-purpose indicator that you can use it for identifying trends, evaluating momentum, defining support and resistance levels, and also having trading signals for entering in the direction of trends. To add this wonderful indicator to our chart, here we click on indicators and we search Ichimoku Cloud, this one, which is a built-in indicator on TradingView platform. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. At first, when you look at this indicator, you may see it very complicated, but it's a very simple indicator and you can easily interpret it and use it for trading. Alright, let's see what we have here. Before I start, let me increase the opacity of this green and red area here in its settings, so it will be easier for you to distinguish between them. Here for the green one, we increase the opacity to, for example, 30%, and for the red one also we increase it to 30%. Alright, now it's better. Each of these lines that you see here on this chart have a Japanese name, but in this video we use the translated English words, so it will be easier for us to memorize them. This blue line that you see here, which is actually the fastest line here and moving very closely to the price action, is called conversion line. It's the most sensitive line among others in this indicator. The formula for the calculation of the conversion line is 9 period high plus 9 period low divided by 2. This red line, which is called baseline, it moves slower in comparison to the conversion line. It's calculated similar to the conversion line, but for 26 periods, 26 period high plus 26 period low divided by 2. Please pay attention that the behavior of the conversion line and baseline is similar to moving averages. Here also, as you can see, this 9 period line is moving faster and very close to the price action, but this 26 period line, this red line, is moving slower and lags behind the blue line. Alright, these green and red areas are called cloud, and as you can see, it's formed by the help of these light color of green and red lines. The green line is called leading span A, and it's calculated based on conversion line plus baseline divided by 2. And this red one is called leading span B, and it's calculated based on this formula, 52 period high plus 52 period low divided by 2. Similar to moving averages, the red one moves slower in comparison to the green one because the red line is calculated based on longer periods, 52 period, and the green line is calculated based on 9 and 26 periods, so it's more sensitive and moves faster and closer to the price action. Please pay attention that the cloud is the leading component of this indicator, and these two lines, leading span A and leading span B, are shifted forward and they are plotted 26 periods in the future. And the last one, this dark green line that sometimes moves close to the price action and the other times far from the price action, is called lagging span, and it's actually closing price that is plotted 26 days in the past. Alright, now let's see how we interpret this indicator and we use it for trading. The most important component of this indicator is cloud, and as I just explained, is formed based on these two lines, leading span A and leading span B. We use clouds to identify the overall trend, evaluating the momentum and strength of trend, and also to define possible support and resistance levels that may hold in the future. When the price is above the cloud, the trend is up, and when the price is below the cloud, the trend is down, and in times that the price is inside the cloud, the market is flat and moving sideways, either part of a pullback or more extended in trading ranges. If you remember, the leading span A moves faster and closer to the price action in compared to the leading span B, this red line. So when leading span A, the green line, is above the leading span B, actually the cloud is green and the green line is rising and moving further away from the red line. It shows that the upside momentum is increasing and the uptrend is gaining strength. And on the other hand, when leading span A, the green line, is below the red line, actually the cloud is red and the green line is falling and moving further away from the red line. This shows that the downside momentum is increasing and the downtrend is gaining strength. As I explained, leading span A and leading span B are shifted forward and they are plotted 26 periods in the future. So the cloud also provides a possible future support and resistance levels that may hold. For example, here you can see that we have the cloud in the future and it shows the possible support area or a resistance area if the price goes below the cloud. Alright, now let's see how we trade based on Ichimoku cloud. When the price is below the cloud, it means that we are in a downtrend, so we must look for short position opportunities. opportunities. When the blue line, the conversion line, crosses below the baseline, the red line, it's a sell signal. In other words, it's a signal for opening a short position. And on the other hand, when the price is above the cloud, the market is in an uptrend and we must look for long position opportunities. And in this situation, when the blue line crosses above the red line, it's a buy signal. Please pay attention that in times that the trend is strong and the price is advancing sharply, the conversion line and baseline crossover may rarely happen. In this situation, we can also have another kinds of trading signals based on price crossover, like the times that the price goes below the blue line and again crosses above the blue line, or in other times when the price goes below the red line and then it crosses back above the red line or blue line. But these signals based on price crossovers are less reliable in compared to conversion line and baseline crossover, so it depends on what kinds of a trader you are and what level of risk you're willing to take, but it's recommended to follow the crossover of conversion line and baseline in the current direction of the market. Ichimoku Cloud is a comprehensive and versatile indicator that can be effectively used for trading, but to have a more reliable trade and to reduce your risk as much as possible, you must use Ichimoku Cloud in conjunction with other tools and aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.